In a significant move that caught the attention of the global financial market, the Reserve Bank of India repatriated 100 tons of gold from the United Kingdom. This strategic decision, rooted in economic prudence and geopolitical foresight, underscores India's evolving approach to managing its foreign exchange reserve and strengthening its economic sovereignty. RBI sources have elucidated several reasons behind this substantial transfer, each highlighting a blend of economic strategy, the risk management, and national interest. But the question is, why did RBI take this massive step? We will learn about all of it in this video. But before that, make sure you have subscribed to our channel, Freedom Money English, and download the Freedom app. Hi, I'm your host Riya, and before talking about the reasons that led RBI make such a massive decision, let's take a look at the historical context and background. Historically, central banks hold significant portions of their gold reserve in foreign countries, primarily for reasons of security and liquidity. India, like many other nations, had a substantial part of its gold reserves stored in the UK, benefiting from London's status as a major global gold trading hub. However, changing global dynamics and domestic considerations have necessitated a re-evaluation of this practice. Now the question is, why does RBI store gold in foreign countries or banks in the first place? During the 1990s and 1991 foreign exchange crisis, India transferred the gold reserve to the Bank of England to secure about 405 million loans. However, the loan was repaid to the country in November 1991, but still the RBI decided to keep the gold in the UK for the logistical reasons. Gold stores abroad can be used for trading on the stock markets and gaining returns. There was no harm in keeping reserve gold in foreign countries. In addition, RBI also purchases more gold from the international market and stores it abroad. Moreover, stored gold at the international level comes with risk, especially during geopolitical tensions. Concerns over the security of assets stored overseas have increased as a result of Western countries freezing Russian assets. In addition, RBI also purchases more gold from the international market and stores it abroad. But the question is, why did they do it? Till the end of March 2024, the RBI's gold price reserve holds around 822.1 tons of gold, which is marked as more than in previous years. Among this 822.1 tons of gold, 413.8 tons were held overseas, particularly with the Bank of England and the Bank of International Settlements. This recent transfer is a part of a broader initiative to repatriate and secure these assets domestically. According to the central bank's annual report of financial year 2024, more than 308 metric tons of gold are kept in India as collateral for notes that are issued. And an addition of 100.28 tons are kept domestically as departmental assets for the banking sector. 413.79 tons of the total gold reserve are stored overseas, according to the annual report. Now let's talk about the possible reasons for the transfer. Number one is economic security and sovereignty. One of the primary reasons for the repatriation is to enhance India's economic security and sovereignty. Holding gold domestically reduces reliance on foreign institutions and mitigate risk associated with potential geopolitical tensions. By bringing back gold reserves, the RBI ensures that a critical component of India's wealth is directly under its control, safeguarding it from the external influences and uncertainties. Number two, strategic reserve management. The RBI aims to diversify and manage its reserves more effectively. To enhance the safety, RBI is considering it. Holding gold domestically in India ensures better control and security over these assets. After all, it is a huge asset for India for the future. Number third is geopolitical considerations. Geopolitical tension is a main consideration. If there is some tension in the country, abroad, there is a risk of freezing RBI's reserve gold. However, an increasingly uncertain global geopolitical environment is seen, so having a physical control over gold reserves within the country is considered a safe option. RBI wants to save its large amount of gold reserves. Number 4. Global economic trends. The global economic environment has been marked by volatility and uncertainty, including trade tensions and fluctuations in the global market. In such a scenario, gold remains a safe haven asset. The RBI's decision to bring back gold reserve is influenced by the need to have quick and unimpeded access to this critical asset during economic crisis. Holding gold domestically ensures that it can be mobilized swiftly if needed, providing a buffer in times of economic stress. Number 5. Mitigating currency risk. Gold serves as a hedge against currency risk, especially pertinent in times of global financial volatility. The repatriation move is partially driven by the need to shield India's reserves from fluctuation in foreign currencies and potential economic instability in host countries. Holding gold within the country reduces exposure to these risks, ensuring the portion of the reserve remains unaffected by the external currency fluctuations. Number 6. Improved domestic infrastructure. Advancement in India's domestic infrastructure have made the safe storage of large quantity of gold feasible. The RBI and related institution now possesses state-of-the-art vaults and security measures, making it practical and secure to hold gold domestically. This development has been a crucial enabler for the decision to repatriate gold, ensuring that it can be stored safely and managed effectively within the country. Number 7. Cost efficiency. Storing gold in foreign vaults entails significant cost, including storage fees and insurance. By bringing the gold back to India, the RBI can reduce these expenses while the repatriation process itself involves cost. The long-term savings and financial benefit of holding gold domestically are considerable substantial. This cost efficiency is a significant factor in the decision-making process. Number 8. Economic stability. Increasing domestic gold reserves can help people have more faith in India's sound financial standing and steady economy. RBI is considering economic stability and might transfer its gold back to India. Now let's talk about implications of the RBI's transfer of gold. First, economic signal. The transfer of 100 tons of gold back to India from the UK will send a powerful message to the global markets about India's robust economic state and policies. It can be committed to safeguarding its financial assets. RBI sent a message to manage its assets securely by choosing to store a significant portion of its gold reserve domestically. This move reassures international investors and financial markets that RBI or India is serious about their assets and maintains financial stability and protection from the potential risk. It will also reflect India's intent to reduce dependency on foreign custodians, thereby minimizing exposure to geopolitical risks and financial volatilities. Next is Enhan Security. Storing gold in India will enhance security by reducing the risk associated with holding it in the foreign countries. A risk to holding the gold abroad like geopolitical tensions, changes in international relations and financial sanctions. If anything occurs, there is a possibility of freezing the gold. RBI wants to bring the gold back to India to reduce the risk and ensure that the assets are under direct national jurisdiction. Moreover, domestic storage of gold also eliminates the uncertainties linked with foreign vaults and custodians. After transferring the gold to India, are now subject to Indian laws and regulation. Hence, this movement enhances the overall security of RBI's gold. Policy independence. Repatriation gold also affects India's desire to maintain greater policies independence. With assets held within its own borders, the country has more control over its monetary policies and financial strategies. This independence is crucial for implementing policies that are best suited to the national context, free from external constraint and dependencies. Next is increased confidence. To transfer the RBI reserve gold back to India will boost confidence among both domestic and international stakeholders. People can trade on gold which is stored abroad. but it can be relaxing news for the stockholders. Moreover, this increased confidence can attract more foreign investment, contributing to the economic growth and stability. Now let's understand the process of logistics of transferring RBI's reserve gold. First, transport. It was very challenging logistically to transfer 100 tons of gold from the UK to India. It required meticulous planning and coordination. Obviously, the whole process required high security transportation from armed vehicles and armed escorts. Moreover, insurance is a critical aspect. Given the high value of the cargo, ensuring any potential risk during transits are adequately covered. This transportation must adhere to both international and domestic regulation to ensure compliance with legal standards. Now let's talk about the storage. After the successful transfer of the reserve gold in India, it needs to be stored securely. As per the reports, RBI has invested in state-of-the-art vaults in India designed to store gold securely. They provided advanced security systems including biometric access controls, surveillance cameras, alarm system, and reinforced structures to protect against theft or unauthorized access. These vaults will be located in strategic location to keep accessibility and protection at the same time. The RBI's focus on maintaining high security in its domestic vaults ensures that the gold is safeguarded against any potential threats. The decision by the Reserve Bank of India to bring back 100 tons of gold reserve from the UK is a multifaceted strategic move. It underscores a commitment to economic security, diversification of assets, and risk management. By enhancing domestic holdings of gold, the RBI is not only safeguarding national wealth but also reinforcing India's financial sovereignty and resilience in a complex global economic landscape. This strategic repatriation of gold is a testament to India's proactive and forward-thinking approach to reserve management. It highlights the RBI's dedication to ensuring the stability and security of the country's financial assets, thereby contributing to the long-term economic strength and independence of India. That's all in today's video. Hope you enjoyed it. Make sure you're subscribed to our channel Freedom Money English and download the Freedom app for more such financial tips. I'm your host Ria. We'll see you in the next video. Till then, take care. Bye-bye.